So, you've been trading gold recently and you figured out that it's not that easy to find that perfect A-plus setup. Most of the time you try looking for that sniper entry and end up being a part of liquidity and then just watch price run straight to your TP. I'm going to help you break this exact loop today. Welcome to this video where I'm going to show you my exact strategy to trade gold and catch sniper entries and trade with real precision. So before we start this video, I just want to quickly introduce you guys to Blue Guardian. They offer a 100% profit split on all of the profits that you make with a max allocation up to $450,000. The payouts are guaranteed within 48 hours, or you get paid an extra $200, which is pretty sick. And there's no activation fees, no end-of-day drawdown. Also, if you trade Forex, you can use them as well and get funded up to $400,000 and scale your accounts all the way up to $4 million. So you can trade Forex, crypto, commodities, and a 90% profit split and 24-hour payout guaranteed. That's for the Forex side. So if you're interested, you can use the coupon code KEY, K-E-Y, and that's going to give you 70% off on Blue Guardian futures and 40% off on Blue Guardian Forex, which is insane. So let's get into the actual chart and showing you guys exactly how to use this strategy. Now, the first important concept that you guys have to understand when it comes to this strategy is rejection blocks, because that is what we're going to be using to frame the entries. So what exactly is a rejection block? Well, all you're using for rejection blocks is highs, lows, and PD arrays, right? All you're looking for is a liquidity sweep, and you're looking for the high that creates the liquidity sweep and then a candle that closes underneath that high, right? That effectively becomes your rejection block. So for example, if we go back to this high right here, you guys can see clearly that we swept a previous high, right? We swept a range high right here, and we create this candle. Now, the wick of this candle, right, becomes the rejection block. And so this is what we use for our entries. Now, all you're going to do is on this wick, you're going to place a rectangle tool, whatever works best for you. I use the rectangle tool. And in my rectangle tool settings, I have the extend right on, and then I have the middle line on. Okay, the middle line is going to be the important one because that's going to show you the midpoint of this wick, right? And that midpoint is going to be your entry. So if market is trading right here and we create this candle that sweeps this high and leaves this wick, this is what we are going to use for an entry. So where do you place the limit? Where do you place the stop loss? Well, very simple. So you take your short position tool, your limit is going to go essentially right at the level, okay? Right at the CE. And then your stop loss ideally is going to go directly above, or you can place it about the middle of this area, right? So you can map out the midpoint of the upper quadrant, and right there can go your stop loss, right? In this case, we have a 2-point stop loss, 107 entry, 109 stop loss, and we're looking to target a low, right? A low of some sort. Now, ideally, what I do is I use the PO3 to frame all of my entries, and in this case, you guys can see that we have this 4-hour PO3 that is going to play out. So we swept this high, and we have the low of this 4-hour candle that is not manipulated. So we need to go lower at some point and manipulate this low, right? We assume that the move higher is the manipulation leg, and it needs to expand lower, okay? So we frame the entry like this, go down to a 1 minute, 5 minute, right? And then that's where you're going to basically watch this trade play out. I'm going to go ahead and go on to 5 minute, and let's see how this trade ends up working out. So as you guys can see, we tap the trade right there, and immediately within 2 5-minute candles, the trade has completed, right? Now, obviously you can extend this much lower, right? Let's say we were to target this low, and we can see exactly how this trade goes if we were to target this internal low here, and no different, right? Price goes straight into the internal low. Now, for this example specifically, I would just target that 4-hour because this is a new daily open right here at 6 p.m. So we obviously can't hold through the daily open. This is the trade right here. And if we map out the trade from just what we had previously, this is a 10R trade, right? So this is just one example of a trade that you can frame here, and I'm going to show you multiple more examples here. Now, here's another beautiful example. We have a low that price clearly sweeps right here, and we leave a nice wick that we can use to frame the entry. So again, take your rectangle tool, go from the lower, you go from the low of the wick to the top of the body, draw out the CE, and this is where you're going to frame an entry from. So we get a long position tool, we mark it out like so, and stop loss again, either at the low or you're going to place it at the midpoint, right? So let's say that we put it at the midpoint and we target a high, right? In this case, I like either for this current daily high or a previous day or previous week high, right? Let's just say we target this daily high and let's watch and see what happens. And the reason why I'm using a 15-minute for this example mainly is to show you guys the lowest time frame that you can use. This is the lowest time frame that I personally trade for this strategy. I don't go down to a 5-minute, 1 minute, any of that. The lowest time frame you can use for a rejection block is going to be a 15-minute specifically for gold and this strategy. Now you guys can see that we leave this low here, and this wick CE has still not been taken. The reason is because this is now engineered liquidity for price to make a range, come back later, take out this liquidity, making this area now a higher probability bounce and then a move higher, right? So this does not mean that you got edged out of your trade or anything like that. This is just engineered liquidity for price to later come down and take this low. So let's watch and see what happens. Okay, so right there at 10 a.m., the trade ends up getting us in. Again, we want to target either a current daily high or a previous day or previous week high, right? So let's just say we're to target this daily high. This is an 11.2 R, and then at the previous week high, it is a 12.8 R. Okay, so not that much of a difference, but a great multiple R trade here. And let's see how this works. Takes a little bit of time, but as you guys can see, the trade does end up hitting absolutely beautifully, man. Not a single pullback, no drawdown, like nothing. Now, one thing that's important to know that I'll throw in here is why a rejection block CE works the way it does. Why is it important? Because that's a question you guys might be asking yourself right now. Well, the reason why it's important is this is just the way that ranges work, right? The way a range works is if you have a range, this, for example, and you draw out the high to the low of the range, where is the most probable retracement going to take place, right? Where can you frame a continuation from? It would obviously have to be within a premium, right? In this case, you want price up here in this area, frame a continuation back down, right? You don't really want to frame another short from in this area. That's not high probability. So it has to be near or above the equilibrium of this range. So when price comes and returns back to the equilibrium, this is where you're trying to frame the short and then back down. Okay, this is just the way that ranges work. The 50% of any range is going to provide you with a great area to frame a continuation lower or higher, right? And wicks are no different. There is a range inside of a wick. So a higher time frame, a 15-minute wick is a 1-minute range, and it looks exactly like this. So all you're doing is you're just trying to take the equilibrium of that specific range and you're going to trade that, right? That's the reason why wick CE works. Now, as far as time frames, I'll quickly cover that as well. This works on, again, almost every time frame higher than a 15-minute, right? It's a pretty fractal concept, but I just, like, personal preference, I don't like to go lower than a 15-minute. Now, can a 5-minute or 1-minute or 3-minute work? It could, but it's not high probability in my eyes unless it's coming from a 15-minute or higher. Now, here's another great example of a wick CE. We have a daily fair value gap, and we also have a previous day high that gets swept right here. We leave this candle with a nice wick. So this is what we want to use, because not only did we sweep liquidity by pulling into a fair value gap, but we also swept liquidity by taking this previous day low and closing inside of the range, right? Why not this candle over the next one? Well, because this candle clearly did not close underneath the previous candle's range, right? So we don't use this candle, we ignore, and we wait for a candle to close within the range to use. So this candle is the one we use, mark out the wick CE, and the following day, we're going to try to frame a short entry from that wick CE, right? So this being a daily wick, right, which means a higher time frame wick, you cannot operate with a 2-point stop loss here, right? You got to go a little bit more risk. So this is something that I would size lighter on. But here we go. There's that daily wick, and I would personally keep a stop loss at one of these highs, right? Now, obviously, you cannot keep a stop at this high on gold. This is 40 plus points of risk. That's a lot of risk. So I would personally keep one right here. Why? Because it's above this 15-minute fair value gap that should get respected. Where do we target? We target previous day low. So that is where we're going to target. Very simple. Let's move. There's our entry right there. Now let's watch and see how this works. Now, as soon as you get a candle like this, you're going break even, right? As soon as you get an impulse candle like this, you're going break even right away. Oh, there it is. 2 15-minute candles later, and there's your trade fully playing out to the TP. This was an 8.57 R, so almost a 9 R here. Market then decides that it wants to trade even higher. So again, what can we do? We can frame another wick CE here. So this is our liquidity sweep. The same candle that we just used in this previous example, we use the high of that candle. We sweep the high, close inside of the range, leave a nice wick. So now this is going to be where we plant our rectangle tool for the wick CE, right? And so we have the WIXE drop down to, whatever lower time frame you want. And this is where we're going to frame the trade. So I'm on a 15-minute. I'm going to frame the trade from here. There we go. There's our entry. Okay. And my stop loss is going to be probably this high right here. Okay. This candle is high. Target again is going to be either the daily low or any of these lows really. And we can map out a short trade. So let's say that we wanted to target this daily low. Let's watch what happens. There's our entry right into the trade. And this one takes quite some time, but eventually the TP is hit, right? You can even target that previous date low. See, that gets hit. Well, a lot of consolidation, but nevertheless, TP did in fact get hit. I'll leave you guys with one more example now, and this is going to be on the weekly time frame just to show you how effective this really can be, especially even when you're swing trading, right? Not just day trading, but even when you're swing trading. So we have a candle here, and this candle sweeps into this fair value gap, right? That is a liquidity sweep. Now we leave a really nice wick here. This is what we can use for our WIXE. So we have not only one fair value gap here, but also a lower one right there, which we close outside of, right? This is why we pick this candle. We mark out the 50% of this candle, drop down into a lower time frame. I'm going to go to the hourly since this is a weekly, and this is where you can frame out a short trade. So we have an hourly fair value gap conveniently pretty much right where that entry is. And my stop loss here would most likely be, let's say, either this low, or I'll probably place it around that low. This is a weekly, so remember, you got to put on a little bit of risk here. We'd be looking for probably these highs, right? These smooth highs that we have right here. This is essentially low hanging fruit. And then as a final TP, you can go obviously much higher into the all-time high, but I'm just going to target these highs for 6.32R. We could see how that works. We get tagged into the trade right there. Beautiful move higher. And there's our full TP for 6.32R. So that being said, I would urge you guys to try this strategy out. I think this is one of the greatest gold trading strategies ever. Can't believe that I'm giving this out for free, but here it is. Hope you guys enjoy.